Thank you. Sorry about that. Okay. There are tools that a dealer can use against its traders. Tool number one is they can, by the way, these are coming from the August 11th, 2000 and August 8th, 2011 class by Steve Mauro. They come from the MetaTrader 4 Managers User Guide from the back office in Dubai. So what this is essentially is I'm going to be explaining and moving through this one. So just listen carefully. This information is why you trade this strategy. Understanding the tools that are out there will help you understand how to profit against those tools. See, the market maker can, for a period of about 14 minutes, let's say you're watching a 15-minute chart, have the candle looking like this. But by the end of that 14-minute period, just before they paint the close of the candle, they draw price back in and they close candle as this form of shape. So the candle was once solid green to like whatever price point that is. Alright, and then they just type in the number of their liking and the candle paints a high and it moves back to when it opened. Alright, so the big candles on the charts during news releases, during CPI, the gaps between the candles on the charts, between news releases, CPI, non-farm payroll, Federal Open Markets Committee, all that stuff. These are the buttons sitting on the other end of your screen at the beginning of the sessions and at the end of the sessions. Whether you're trading currencies, indices, stocks, whatever. The beginning of the trading session and at the end of the trading session. So I'll go back to the other slide and speak about that stuff in detail. Here's an example on the chart. Alright. See, ever open the chart and price was trading at a certain price points, right, for an extended period of time, sideways, and then it comes out of that sideways move. Okay, comes out of the sideways move, and as soon as price comes out of the sideways move, goes into another smaller sideways channel. Thereafter, you get this big monster candle. This candle was once solid black to the bottom here. It was once solid white, clear, white, whatever, to the bottom here. And it closed all the way up in here. What's the language with what's happening in here? What happens to everyone who sold in here? They're making a loss, and it is all at the click of a button. It is all at the market maker's will. They simply type in this price point and candle closes away from all these people in here, leaving their bums jammed for like 4 or 5 hours, so price will come back later on in the day. Alright, so yeah, I know I'm sounding a little bit off-ish today. Yeah, I know. I'm a little bit exhausted. I've been up since yesterday. But I'm hoping that I'm just delivering this information to you in great packaging, really. So price will go into a consolidation. This one big candle is a product of a market maker simply manipulating price. This big candle is in line with the end of London session trap move, candlestick trap pattern. It is also a repeat of the low of the day. So it's all these things coming together at this candle or at this price point that make you realize that you have this big dance happening around in here. That consolidation stop and low. Yeah, I know you guys are asking, where do you enter on this one? This candle is too big, it's a pass in the currency. Okay.
Universities for 800. Author Ralph.
Pardon? Was that a question?
No, I'm sorry. I don't see the flash and recording button. Am I missing it? Are we definitely recording, right?
Oh, I'm recording using my own built-in recording system. For yeah, I'm not using the Zoom record button. Is this okay with you?
Oh yeah, sure. We have access to it. Thank you very much. Sorry.
No problem. You will have it. You will have access to it as soon as I make it available online. So, ladies and gentlemen, it's still the same thing. What I was speaking about was essentially that very same thing. Just ignore the EMAs at the moment. At the moment, they're on the charts. I think I have the 13 and the 50 EMA, namely the catch up and the watermark, nicknamed the catch up and the watermark. Okay, so let me just move on to the next tool, which is going to make you understand the business a whole lot better. Okay. Jeez, man. I think the slides are on the timer. Okay, there it is. I can go like that. Oh. Now I know what's happening. Okay. Okay, so the brokers know how much money you have left in your accounts. You see, on the left hand side, it's your login, and on the right hand side, it's how much money you have left in your accounts. Some brokers have a call out level of 0%, 0% call out level. What this means is, if you had $100,000 accounts and you were getting margin called, they won't stop calling out your accounts up until you have $0. That's essentially what it means. So I know with dealers like Deriv, you got like a 24% stop out level, and with dealers like Vault Markets, you've got like an 18% stop out level. and they scale those stop out levels against you anyway, basically based on account size. So essentially, there is no escaping, but there is understanding that this is why you do not over leverage your accounts. This is also why you don't look to place big positions on one trade. Just gradually grow your trading accounts. However, the objective is to grow your bank account more than you grow your trading accounts. What do I mean? Try finding a niche, like, find that comfort zone where you're drawing as consistently as possible, more than you're depositing, basically. So the broker knows how much money you have left in your trading accounts. Moreover, they also know how much money you have left in your trading wallets and your bank accounts. But that's a story for another day. It's called surveillance. Alright, so let me explain this stuff now. Can you see those 3 buttons? Return, send, confirm, reject. Alright? Ever been on an account, maybe like during the news, like 5 minutes before the news, or 5 minutes during the news, like it's like there's like a news release, maybe like at 1800 EST. There's a news release there, maybe Federal Open Market Committee member Bailey speaks. Alright, you're gonna see this glitch. So they'll try to call it like 5 minutes before, or 5 minutes soon into, or just during the news, where you place a trade and it will say invalid parameters, price has changed. Or if it hasn't, it's just going to literally go recodes on your MetaTrader. Your broker can literally, at will, do this. Your broker can return your order. In turn, what's happening is the market is moving. So if you reissue your order and you come back and you like, if you get that recode and then you accept the changed price has changed. So in the context for which you wanted to trade, you might be getting in on a weaker setup just because of this stuff. This stuff is designed to delay you. The broker doesn't necessarily even need to press these buttons anymore, especially with these modern day, can I call it, tools. The algorithm simply sorts it out. 5 minutes before a news release, or 5 minutes just like into a news release, the algorithm will simply be recoding people at will. I mean, they can't necessarily deny you participation, but they can delay your participation. And like I just made mention, what this does is it in turn prices moving. Let's say for instance, let me draw right here. Here this set up in here now. Okay, moves back into consolidation, and then this happens. Pushes up, then you get the first leg, and then you get the second leg, and it's in line with the news release. Maybe it pushes up above. Okay, then you try entering, They recode you. You try entering, they recode you. You try entering, they recode you. You try entering, they accept your order. Right in there. Then they just pull price back and then continue moving downwards. The market maker was recoding it because they knew, the algorithm knew. It put you in a future calculation, calculated the future, it knew the positions it has over the future. Alright? So they know the symbol you're trading on, they know the amount of lots you're trading, they know your stop loss level. You know your stop loss level, your take profit, okay, and how much profit they have against you as you're losing. Alright? Or how much loss the broker is holding against that position for you in the particular reason where you would be winning. The stuff is going to start making sense. Brokers don't see charts. The brokers just see price points where money is resting. They just see price points where the money is resting. So this is how stop outs or can I say trap moves are initiated. So they use that little button for the candlesticks and they type in the numbers on the candlesticks somewhat the previous day. And then on the next day when they come back, they see that this price points isn't giving them what their future calculations had estimated due to some mathematical reasons. You know what the algorithm does is it will stop out an unlimited number of people. Look at those arrows, where the arrows are. So the market maker can just simply click stop out, check the box, and then use this. See, it's in different languages. They just click OK, and you have the second leg of an M bigger than the first leg. When the second leg of an M is bigger than the first leg and it closes on a railroad track or a pin or a hammer, all that stuff, it convinces the rest of the retail world that it is a breakout trade. So that's why the stop out is unlimited. It's because it takes and accumulates buy traders in that context of what I just explained. So in that particular context, because context is everything in trading, you need to then follow the first rule in Forex. Now listen to this. Sell high, buy low. Now I'm going to tell you where when you're selling high and where when you're buying from the low. Place your entries where the masses place their stop losses. Before you place a trade, go ahead and annotate on the chart and literally go like, this is where I would enter, this is where I would exit, this is where I would place my stop loss. 9 times out of 10, wait for price to move away from your desired entry level to your stop loss level, enter there, and then you will be rewarded. Alright? That's why I have the concept that I buy on red candles and I sell on green candles. Go zoom in on the image that I sent in on the Discord. I don't know. I don't think it's entirely necessary for you to do that, but then for some people it may be. Alright, so this stuff should tie things together for you, because once you understand what you're up against, it should be easy for you to, fight and conceptualize what's happening to your accounts. Spread. Ever been trading with a floating spread dealer or floating spread broker? If you've been trading with a floating spread broker, you know it to be true that at midnight you shouldn't leave your trades overnight, né? Over the weekend, all that stuff. You see that little slider where the arrow is, that slider. Market maker can run price up to a given price points, and then this is the bid, hold the bid, then open up the ask to that price points, and then thereafter, at will, without anyone disagreeing with this, grab that price points away and reduce the spread by that much simply by using this tool, that slider. Then they click the OK button, then the business is done, the damage is done. What damage is being done? Consider the people who had buy stops aggregated all up in here. Consider everyone who has all those buy stops aggregated all up in here. I mean, this is the broker we're speaking about. The brokers have a large sample of clients. So when the spread does this, essentially what is happening is the broker has used the ask line to pick up and activate all these buy stops in here, sell limits in here. Alright? In turn, what this does is it validates those textbook technicals that retail traders follow. That, oh no, it's the ABC extension, Elliott wave, whatever. All that crap that we find in our textbooks. Then they correct price against us. They correct price against the retail world. Everyone who didn't know that there's such tools out there. So this is another signal for you to identify at the high of the day or at the low of the day. Tool is, if you have a variable spread dealer, you will see spread open up, or you'll see the spread widen and then narrow around certain price points and around a specific time. Session change over, beginning of day, end of day, beginning of week, end of week. See, like there are variations in between. So the business is not random. The market maker only has like 2 or 3 patterns. So the business is not random. They must wait more than they move. Excuse me. Alright, I'm getting into the red region with this lesson. Okay, what do I mean the red region? Getting into the red region in the sense, I've got like 10 minutes remaining, so I'm just going to be sitting here speaking about the tools. Okay, so in this case, price came out of a consolidation. Let me grab the pen, speak about this. Price came out of a consolidation, extended consolidation. This is, geez man, I can't see. Yeah, actually, we got a stop on low. You remember what we spoke about initially, the big candle. Yes, market maker from this one has been manipulating price leading up to session change over 10:30 a.m. which is second leg of There's W formation. There's the W in here. Right? This being the target, the 50 EMA. So you enter on the second leg, close on hammer, 10:30 a.m. South African time. Okay, it's usually 3 a.m. in the morning in New York, I think. Yeah, it's 3 a.m., 3:30 a.m. London session open. The take profit for currencies is 50 pips. I recall someone asking me last week what the take profit is, and I spoke about this level in here, initial high of the day. When you're taking it from the bottom, then the last take profit would be the high of the day, of course. So here it is again. You get that big candle. Market maker typed it in. Then above here, you've got that 25 pip stop hands, which was made in one candle, in one move. The 25 pip stop hands is exactly what you're looking for when you're trading currencies. You're looking for price to trade 25 to 50 pips from above the box or from beneath the box. Actually, let me put it right there. Alright. That's entirely what you're looking for. The spread will widen at these price points. The spread will widen earlier on, yes, here as well. The spread, you'll see the spread opening up at these price points. The initial low of the day, the initial high of the day, the low of the day and the high of the day. Okay. I'm really tired, man. Okay. I feel like a zombie, actually. And I also feel like I'm ruining it for the guys who really need me to be energetic today. Alright, I'm sorry, guys. Okay, so the same old. The same way that you still use your windows is the same way that the market makers use their interface, their graphical user interface. So I know it to be true that on your windows you have you have a left hand side. Actually, you have a left hand side or a left hand window. You have a center window, and then you have a right hand side window. So it's not really complex as to what you're watching. So now all of this stuff starts to make sense now that I have put it that way, isn't it? So the broker knows what symbols are being traded in that session. Look left. They know who is in trouble with those active markets at that active trading session in time. So they know who's in margin issues, flashing black and red back and forward on their accounts. They know your account balance, they know your city, they know your country, they know the group you're trading in, whether it's a standard account or micro accounts, whatever it is. Alright? They know your name and they know your logins. You're basically grouped by how much your account has in it and where you're from. Also, you're grouped by like the type of accounts you're holding. Right? This is the account manager's desktop. So it has a top part and a bottom part. There's another way of looking at account manager's desktop. A top part and a bottom part. Sorry about that. Okay. That's the top part. This would be the bottom. In the bottom we have the toolbox. In the toolbox, primarily the dealer is looking at the symbol, the activity, how many people have purchased, or how many buy lots is the market selling to the retail trader, or how many sell lots the market is buying from the retail trader, and at which price points are these transactions occurring. The net amount of lots that have been exposed in the market, and of course now their covered profit loss. These are all very important numbers, and that's why they're all displayed at the same time. Probably. Okay, because it's like they need to find a balance between these numbers. And market makers literally walk into an office and they tell each other, dude, I made 700 million in the previous session. I am 400 million US dollars shy of my targets, and the boss is not going to be happy.
Recording in progress.
They'll simply tell you that stop out unlimited across the board, and then they open the spread, widen the spread, paint in a big candle, and it works against you. And that's how they book a profit against you. So in about 3 minutes, I'm going to be ending by force. But what I'm trying to get to is, it is entirely unnecessary for you to have charts like these. Alright, so let me go back a couple of slides. I promise to come back to this one. Okay. Right, just practice. Excuse me. I don't know what's happening. Okay, just practice. Yeah, I really don't know what's happening now. Should be able to free draw. Okay, let me use the pen. Okay. Initial high, initial low, repeats the low. You need to know that this is what I'm speaking about when I say they stop out unlimited. They hit the number, they repeat the number, but they fail to break it. Lights out. Alright? Moves back into consolidation to end the day. Alright? See, maybe you can 1, 2, 3. They fail to break the number. Lights out. Sometimes they'll break the number, but they'll come back into it. So timing elements, if for some strange reason, if for some strange reason the timings in line, actually before I do that, if timings are in line with this stuff, the lows and the highs, lights out, your trades are good. Because you know that at the session changeovers, the brokers are manipulating price. So ladies and gentlemen, this is where I'm going to stop, and I hope you found this insightful. If you have any questions, may you please kindly address them to the Discord or my WhatsApp. Otherwise, you can find the stuff on our YouTube channel at Cromwell Investments. Otherwise, this is where I'm just going to be stopping, and this is also where I'm going to continue in the next lesson when I speak in detail about the timing. Today, it is all about tying things together. Alright, it is all about tying things together. I know I used slides that are relatively old, but those slides are my bread and butter, and I still consider them every day when I am trading. And I hope in the light of what we all want to achieve, we can all just work properly towards becoming better traders. So ladies and gentlemen, I really appreciate you for taking the step. Good night.